I'm Catherine Ross, and I'm here live from the NYSE with Jim Cramer. Jim, let's kick this off. What's on the top of your mind?
The big win.
Congrats.
The big win last night, and showed me that Jordan Howard, you people who are Bears fans who denigrated him, he does have great hands, and that's ridiculous. What else is on the top of my mind? All right, I want to say something. The stock of Micron, there were a lot of analysts who ran it up. They felt that there was nothing that could ever go wrong selling at 5 times earnings, and they didn't take into account what Sanjay Mehrotra said, which is that this year is not going to be the year, next year. So they got ahead of themselves. They took the stock to 51. Now these people are bailing out in a very emotional way. The buyback, Eric Johnson's done unbelievable things at TheStreet. Buyback, I think, will kick in a few points. I think you start right here, but expect that it won't be your only buy. The stock is going down. It's a down stock. But I do want to point out that the main reason it's going down is because of the hype of the analysts, not because of the company itself. Because the demand on many different categories, whether it be for server, for cloud, even for 5G, it's going to be humongous in 2020. But the people who own this stock, they can't wait till 2020 because they're all renters and they're just blowing it to Kingdom Come. Let them do it. Let them blow it to Kingdom Come. Now the brokers are working to try to get it the best average. They'll knock the stock down 43, 44, then try to maybe close it at like 44 and a quarter if they can get it that high, and their job will be done. I suggest that we don't know where it's going to bottom, and I have not. Look, I'm not a Micron guy. I'm an Nvidia guy. I'm just telling you the way I would trade it. I am not. I'm not wedded to it at all. It is a commodity. I like Nvidia, but I just want to tell you that the stock's really going down far more because the analyst community and how wrong they were than it is to Sanjay Mehrotra himself.
All right, and I want to talk about Micron a little bit later because it is our real money stock of the day. But first, today we were supposed to have an IPO. Endeavor was supposed to IPO on the New York Stock Exchange today. They pulled out last night.
They pull. I mean, unlike most of the desperado companies that are coming public, that if they don't come public, they're just going to collapse. You think of WeWork. There's a lot. They have a lot of money. Now, they have a lot of debt, and they were going to use some of that money to pay down debt, but they also wanted a public currency to be able to buy things if they wanted to. They're an arms merchant for all of the different artists that are going to be in demand because of all of the different over-the-top services. So I wanted to own the stock from the point of view of being the arms merchant for them, or the picks and shovels if you want to be politically correct. But you could say, well, Jim, you're completely compromised because it is your agent. And I would say I'm compromised because they're a good agent. And sometimes you have more insight than people who don't have them as an agent. They weren't going to give this company away, and they would have had to give the company away, and so they're not going to. And I think that was the right thing to do.
But why the night before? Why pull out when they said to be fair?
Peloton was a disaster. Now we said Peloton would be a disaster. I made the jokes that it's where my wife hangs her sports bra. Now a lot of things I was discussing it with our terrific bull market fantasy people, and also with my people at Mad Money. A lot of what I say is meant to be metaphorical. See, there's people who are numbskull. There are people who are less informed, who genuinely believe that what I'm saying is don't buy Peloton because of my wife's sports bra. And these are people who obviously went to college to get stupid and don't understand that I am saying metaphorically this thing does not have the life that you think it is, and it may have peaked last quarter. Although you could argue that, the numbers went down because the quarter of resolutions is when people go. But I feel strongly that people have to understand that the deal was overpriced. The company's good, but the deal was overpriced. And a lot of times what you have to do is say to yourself, why do I want to share in Peloton? Why? I want to share in PepsiCo and get some dividends of Verizon. I would like a share in Texas Instruments. I want a buyback. I want a dividend. I don't want craziness. And craziness is a company that has no plans of no chance of making money. So I really want to point out that it's the way the market is. They should have come public 6 months ago when we still had an appetite for high growth companies. We don't now. And that's something that Endeavor saw, and they really walked away.
Let's switch gears because I want to ask you about Wells Fargo's new CEO since they just got a new guy, Charles Sharp from BNY Mellon.
I've known Charlie for many, many years. I think Charlie is an unbelievable choice. Now, look, the stock goes up today, and then on Monday, people forget what a good choice is. I want to know it's possible that you'll get some upgrades because Charlie is a loved figure on Wall Street. Why is that?
A banking veteran.
Yeah, he's banking veteran, J.P. Morgan, Visa. At Visa, he took a company that was very non-technology oriented and made it technology. At Bank of New York, he spent a lot of money on technology, but kept the expense ratio actually very low. He actually lowered expenses. So Charlie is considered to be a modern-day whiz when it comes to technology. An affable fella. After there's a little acerbic nature at the top, and then he can be affable. Like Tim Sloan, which is important to me because Tim was not involved with a lot of the shenanigans, even though the Sherman and Sterling report didn't make that clear. But Charlie will help move the culture along. It's not fixed yet. The culture's not fixed yet. Charlie will fix it. 6 months from now, you'll start seeing the progress. People want to get a jump on that, obviously. But remember, they wanted to get a jump on Micron. This market is not a get a jump on market.
So, Jim, in your Real Money column this morning, you wrote about the market psychology and you had some stock picks, but I want to step away from stock picking because what should investors do, what should tepid investors do in this market right now?
Well, look, I'm a believer that these are opportunities to buy stocks that are down 5-6% from their top that have very good stories. That's what you do. The market will be oversold. Try to find stories that aren't directly related to China. There's plenty of them. I had a lot of discussions with people, soul-searching discussions with people over at Mad Money yesterday about how if we just pay attention to China and tariff and FANG, we are going to miss opportunities, but the opportunities are not purloined letter. They're harder to find. I mean, it is hard to find Steelcase. It is hard to find Herman Miller. It is hard to find J-Bill. It's not hard to find Nike. Nike was very good. I buy Nike here. But what I think, Nike a little bit lower. It was in the piece. It's not exactly, I don't like to buy things at its all-time high. But, I mean, you have J&J all the way down to 128. Okay, so it's going to lose a couple cases. Maybe it goes to 123. We own a fractional. We sold a lot much higher. I would buy that there. I just find that this is a good moment to start buying some things, and you should do that. Now, does that mean that it's going, Monday's Rosh Hashanah, a very light day. Historically used to be a great day for the market, not lately. So wait till Monday.
All right, and also head over to Real Money to read Jim's column and see what stocks he's picking out. Jim?
Yeah, I mean, I write every day. I always say this to the free people. I know there's like 80 of you out there. Real Money is where I blog every day for the last 24 years. It might be worth looking at.
We've come full circle. We're back to Micron. They reported earnings, as you said earlier. But based on Micron, I want to look at just earnings season in general. Should we see lowered guidance from companies that are reporting?
Well, Micron in particular, just because there was a glut, and the glut is still there. Eric Johnson, again, doing great stuff. And when you have an inventory glut of whatever it is, whether it be clothes, whether it be semiconductors, whether it be widgets, whether it be drones, your product's going to go, like plastics, like with Dow. Your stock's going down. And that's what's happening. These are all commodities, and don't expect the stock to rally while there's still too much inventory. Micron, again, went to 51. A bunch of analysts bulled it 48 to 51. They were wrong. People are blowing it out. There's some people, by the way, who say, well, Jim, it's your fault. And I say, okay, fine. So is global warming. And whatever.
All right, and in case you missed it yesterday, we had a great bull market fantasy show. So if you need to get ready for your fantasy teams on Sunday, check it out on bullmarketfantasy.com.
We had a really funny show yesterday. And
it was hilarious. I was cackling on the side.
Yeah, and I made some changes in my lineup because of the show, so check it out.
All right, and now we're heading over to Action Alerts Plus because Jim's got some stocks that he wants to break down that he's watching in this market. So, of course, head on over to actionalertsplus.com. I'm Catherine Ross, and we'll see you on Monday.